And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast, my fine futures friends. Wednesday, November the 23rd, the day before the Thanksgiving holiday. Good morning to all of you. As always, our goal is seeking accurate context, good risk management, and remaining patient in our trading today. If you're already in the markets, hopefully you've got things going your way. The data dump is, in large part, kind of out for the day today. We had some important numbers this morning. Let's take a brief look at them. Jobless claims, initial jobless claims, higher, 240,000. They were looking for 225,000. That's the highest we've seen in quite some time. Continuing jobless claims can also higher. I think this is one of the things that the Fed is trying to do is to slow employment. Durable goods, core durable goods month over month, 0.5%, a little bit higher than expected. Durable goods orders overall month over month, also a little higher than expected. We did have mortgage rates come out this morning. The 30-year mortgage rate with a bit of a downtick. Last was 6.9%. It's 6.67%. So may see some decent numbers as far as housing in the near future. What are we still waiting for? We're still waiting for new home sales and Michigan consumer sentiment. Those are both at 9 o'clock this morning, and then the EIA petroleum status report 9:30. Nat gas at 11, and the FOMC meeting minutes due out at 1 p.m. Central. I'm kind of hoping that I'm going to be done trading for the day before 1 p.m. Central. It's kind of a synthetic Friday for us because we know we're not going to be trading tomorrow, and I'm suggesting taking the day off on Friday. We do have some limited hours and certainly some limited participation the next couple of sessions. So see if you can make a little bit of money today and take that into the holiday tomorrow. So this morning, stock index futures were steady, coming off that a little bit this morning after the numbers come out. Yesterday was kind of a technical breakout above the bull flag that we were looking at in the S&Ps. And then I think that was really aided by some softer Fed speak throughout the day yesterday. Crude prices dropped about 2% this morning. On talks that the G7 is looking at capping the price for crude oil, for Russian crude oil again. So some more talk about that. Market is really news-driven these days. One notable earning this morning, John Deere and Company came out beating expectations on both earnings per share and revenue. The VIX this morning is up marginally at 2157, still a very small number. Dollar index down again marginally at 106.9, and the yield on the 10-year 3.77%. Yesterday in the forecast, we were kind of suggesting that the markets were going to be smaller ranges. I don't think we, impressed all that much with the range in the S&Ps yesterday, although it was bigger than expected, and we did become directional. Trying to fight those is a very, very difficult thing to do. So we did put up a late spike at the end of the day yesterday, which may provide us some decent context for this morning. We're going to see that in the charts. But it always just goes to show you that there's nothing that we can really predict. We've got to be able to respond to the markets and what the markets are telling us in real time. So we had a group coaches playbook yesterday about bias and about how bias can sometimes hurt and maybe sometimes help. But I think in the most most of the time, your bias should be based in market information, context information, what the market is telling you, how good of a job it's doing in the direction, if any direction. And we got to try and find always those opportunities to limit the risk. Look for those opportunities to take those cheap trades. We are, of course, going to be checking the charts here shortly. As always, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome, as is love. Make sure you subscribe to our YouTube channel so you get notified when we do go live. Good morning to all of you. Theo, first in the room this morning. You win the prize. Joel, Caprice, Jules, happy Thanksgiving to you as well. Shaw Cunningham, Charles March, Serenity Trader. My brother Rick, good morning. I love you, buddy. Alejandro, Jason, Bill, Serenity Trader. Just a reminder that it's already Thanksgiving in Australia. In Australia, they do celebrate a big Thanksgiving there. And I also understand that Thanksgiving is a very big holiday in Italy. Maybe. Chow down. DA, good morning. Anissa, the Rooster, Denise, Anissa and Denise, the Rooster, Corona already. Marcelo Hegel Matters, good morning. George Duque. Sarah Hall, good morning. Prayers and love to you as well. Sean Fitzgerald, Danny, David, Caesar, Randall, good morning to you. Trading Research, good morning. Might take my garbage to the dump, then stop by Alice's restaurant for lunch today or tomorrow. I understand that you can get anything you want at Alice's restaurant. Terry King, good morning. Vince, Nathine, good morning. Rob T. from the UK, good to see you as always. Timothy Marks. Jan R. Adrian, good morning. What time is Make Hogue Money? Today is at 2 p.m. Central. We're going to do the closing session for Make Hogue Money today. Hope to see you there. Sean, happy Thanksgiving and blessed to you and all of yours. Dowitzer Nostic, Dr. VJ, happy Thanksgiving to you too. Dr. Rooster, yeah, the Rooster is telling us to eat more turkey, of course. Of course. We don't want any capons tomorrow. Dimitar, good morning. Stephen, happy Thanksgiving to you. Eric Hall, good morning. Eduardo's, good morning. Good morning. All right. Off to the charts. Let's see what we've got going on early in the session here. And we do have a little bit of context, a little bit of nuance for us in the equities this morning. Let's take a look. Alrighty. So here's the daily in the S&P is noticing for the last 8 or 7 or 8 sessions, very indecisive. Now we are up against the upper extreme of this indecision area. We had a directional day to the upside, but it didn't really change much. I think there was a pretty good close yesterday, but again, we've got to see how the market responds after the open today and where it opens in respect to the close and the late spike yesterday. We added 3,100 estimated open interest on the move up yesterday. Volume in the S&P and the New York Stock Exchange continues to be quite low due to the holiday week this week. This open interest addition does indicate potential new buyers, and that's kind of what happens when you have a bull flag breakout, and that's what you want to see happen. Is you want to see open interest increase, you want to see new buyers coming into the marketplace. So that is what we would expect after what happened yesterday morning when we opened, breaking out of that bull flag. Now, we didn't really see that bull flag as clearly in the NASDAQ, but by the end of the day, the NASDAQ did close above that trend line. And again, we'll see that in the charts here. So we are in the upper extreme of balance here in the S&Ps. Take a look at the 30. So there's our breakout. Okay, here's our assumed bull flag yesterday. We opened above it, couldn't even trade back to it, and then the market continues its move to the upside. As a matter of fact, yesterday on the TPO chart, where did we trade down to in the session yesterday? value high from the previous regular trading hour session. It also happened to be the point of control in TPO and volume profile was where the market reached down to, found to be too cheap. Buyers rejected that level, sellers backed off, and the market continued to push higher all day. Here is the late spike we're talking about, all right? So the late spike, I'm going to put this on the 30-minute chart now so we can get a look at this. The late spike is when the market continues to push in higher or lower directions right at the end of the day. The market doesn't have time to accept those levels in the day time frame. We can see that, if we were to look at overnight, it looks like acceptance, but because none of the participants are there, it doesn't really matter. So we're going to be watching to see if the market opens below the base of the late spike or above the base of the late spike. The base of the late spike is 4,007 quarter, 4007.25. Right there, right now. I mean, it's kind of iffy if we're going to open below the late spike, in the late spike, or above. To review the rules of the late spike, opening flat out above the late spike is the highest probability of acceptance of higher pricing. We're looking to buy weakness in that case. Opening inside the late spike is secondary high probability of acceptance of higher pricing, but opening below the base of the late spike is rejection, potential rejection of higher pricing. Now, nothing works exactly the same twice. These are all about probabilities. It's all about probabilities. So when we are looking at this late spike, the 230 bar really starts to drive higher and then finishes into the M period or the last 30-minute period. So there is some kind of question as to whether our late spike begins here, which would be 4,175. We just traded right to it in the overnight session. So I'm going to be kind of expanding my late spike here to include our overnight low. I want the market, if I'm thinking it's going to go lower, I want it to open below that level. Inside slows me down a little bit and has me thinking about maybe accepting higher pricing and price moving higher throughout the session. All right, so we do have our challenge set out for us. If we were to open right where we are right now in the regular trading hour session, it's a hint of acceptance of higher pricing. If we open a flat out above the late spike, that's the highest probability of acceptance of higher pricing. But if we open below our current 4,002 regular overnight low, I think that might be starting to mark rejection of higher pricing. What did we do yesterday that was visual that drove price higher? We had a naked point of control in the TPO charts, which was right here, 4,017, almost got to it. There is still another naked point of control in the volume profile that looms above here. So both of these points of control are still visuals for price to target if the market does continue to the upside. One thing I'm not really big on, well, we did have an overnight recent high back here. Markets tend not to like that, and if we get back in the neighborhood, we will take that out. We still have a lot of work to do, and we've got to see how this market opens in relation to this late spike. Take a look at crude oil. So, wow, some continuation now to the downside. This market really getting whacked here, down almost 4% this morning. This excess down here was kind of created by news. This move to the downside is also created by news. This is a very news-driven market. We lost 12,000 in open interest yesterday. A lot of that is because of expiration and the end of the December contract. Obviously, it's a news-driven market. Volume, look at how low volume was yesterday. Not a lot of participation. The drop in open interest, holiday related as well as rollover related, quite possibly. Don't forget we have the EIA petroleum status report today at 9:30 Central Time. Here's the 30. Well, we've opened with, we're just about to open. Well, we did open with a substantial gap. We still left a little bit of a gap up here. We've got point of control here. We've got a naked point of control here. The fact that we are opening back in this range leads me to believe that there may be some more repair that needs to be done in Monday's profile. It's a very toothy, very long, very, very uneven profile, and the market may, with the new news, find some sort of solace or comfort back inside value from Monday. Last week's low is this purple line here, 77.50 approximately. This naked point of control here comes across at 76.25 approximately, and then our weekly kickoff low, which we tested down to on Monday. There was a little bit of a typo. The weekly kickoff says weekly kickoff low is 75.50, but I've got it written down here at 75.20, which was really the measured move off of the breaking of the neckline from our head and shoulders on the daily chart. So here's our neckline. Here's our measured move, which took us right down to 75.20, which is right about, within 7 ticks of where we got down to on that move to the downside on Monday. It's going to be a challenging trading day. The last thing that we want for anybody is to get into trouble and blow things up today. It's not worth it. Take your time. Make sure you stick to your risk parameters. If you get to your personal daily loss limit, try and just walk away. It's going to be 4 days before we're going to have the opportunity to kind of, get back into the markets and perhaps earn some of that money back, but it's just necessary. Don't get hurt today. Please enjoy your holidays. Here's the NASDAQ. So again, not as defined a bull flag, more of a descending triangle, which we did break out. Oh yeah, the Swede, the NASDAQ had an extra 2 in it. And I do apologize for that. So, all right, back to this. We had a descending triangle, which we eventually did break out of in the regular trading hours session yesterday. This market, while the S&P's is at the upper end of balance, the NASDAQ is centrally located in balance. Adding 3,000 contracts in open interest off that low yesterday is encouraging for continuation for new business to the long side. But the market is currently in a sort of an upside digestion. I would call it that in the S&P's. Not quite sure what to call this digestion here. And here we go. So here's that trend line on the NASDAQ, which we eventually did break out of. Here was kind of our last week's low was the bottom of our descending triangle. We've broken out above it. So we are looking for continuation of this move. We don't know if it's going to happen with all this news and economic stuff coming out today. But we also have a late spike. Now, the base of the late spike kind of has 2 bases. Let me get this out of the way. We did trade to this yesterday. All right, so look how far we are from the naked point of control that we're so close to in the S&Ps. All right, so big move to the upside yesterday. Volume was better in the NASDAQ than in the S&Ps, overall, if you ask me. So again, we've got the late spike situation here. The base of the late spike, the true base, is right here. It is 11,732, but I'm thinking more like the base of the late spike should be down here around 11,707. We have yet to get down to this base of the late spike. The NASDAQ, it looks like it's actually going to probably now open above the base of the late spike, which marks acceptance of higher pricing. Again, there's nothing finite. There's nothing for sure in futures trading. We can open above this, reject, and come all the way back to the late spike, to the base of the late spike, to look for opportunities for longs. Again, if we open outside of range and value, then we run into another special situation, which is the value area special situation play. Now, volume value is flat out right at the high of the session yesterday. Looking at the TPO value from yesterday, that's all the way down here. So you got volume value up to the high, TPO value here. This further complicates that idea that the value area special situation play could come into play. Because if that's the case, then if we come back into range at all from yesterday, if the volume value special situation play comes in, well, then we may look for the opportunity for the TPO value area special situation to come in later on in the session. It's crazy. It's crazy. So be cautious. There's a lot of nuance. There's a lot of conflicting nuance in these markets today. Here's the gold. Now, gold had I think the biggest reaction to the 730 numbers this morning. It took a nice tumble to the downside and now has since recovered that. All right. Besweed, this question is interesting to me. Given how correlated the NASDAQ and the S&P are, would it be worth considering them as a single product? The NASDAQ seems to respond to ES levels and vice versa. While they are directly related, sometimes they are drastically different, Besweed. Drastically different. I would suggest to you that you focus on the product that you're actually trading. The correlation can be helpful at times, sometimes not. All right. What do we have here? We have gold. All right. Gold is now officially in rollover. Monday or Tuesday will be moving to the February contract in gold. It's been a long trip of having the December contract as the front month going all the way back to July. But now, finally, we are back in rollover, losing 12,000 contracts in open interest yesterday, largely greatly related to rollover. Volume and open interest are now going to continue to be blurry through the end of rollover. So are we beginning to establish a rollover range? Before the numbers came out at 7:30, I would have said that. Now we've taken a look to the downside. Let's take a look at the 30-minute chart. So there's our knee-jerk after those 7:30 numbers, right back into range, well, overnight range. No real overnight inventory. We did, I believe, open with a gap. That gap has now been closed. This may be resistance. Again, we also run the risk of reaccepting in range from yesterday. I'm not all that fascinated with this market lately. And I don't know why, but it's just it has not been recognizable to me. Take a look now at the euro. So we've got the dollar, the dollar index lower again this morning, and it's got the euro higher again this morning. So we've added, actually, we lost 5,600 in open interest yesterday. Let me check that. Yeah, we lost 5,600 in open interest yesterday alone. I think we got a little bit too short in the hole here, maybe. Those short covering are going to take some of the buying power away from the market. We're largely in range and in value and in short time frame control. So our short time frame levels, and there are going to be many of them, will be the areas where we'll be looking for opportunities. Now, we've opened with the gap. We've been putting in higher lows and higher highs. I don't think that there's any real correlation to where these trend lines have come in here. Just a kind of a coinky-dink. So I'm going to take the ray off of those. Now we can see, well, we're kind of creating a gap below a gap. Is this an island low? If this kind of remains, if this gap remains and the gap to the open today remain and we continue higher, that's exactly what we've got here. We've got an island low. We're going to have to, again, make sure that the dollar is remaining weak. It's going to be a challenging trading day today, I think, as if they aren't always. The 10-year is just waiting for information. It's kind of hanging out, whistling a song, waiting for the FOMC today, the minutes today, and then it's 2 weeks to the next FOMC meeting. It's a 2-day meeting in the middle of December. Well, we got a little bit short and whole here. We are now reconciled as far as our overnight inventory is concerned. What are we going to do? We're back in range, back in value. Patience. Patience, Iago. And it starts to get cold out. Look what happens to the natural gas. Here's the daily. Boy, we're getting some real continuation this morning. Yesterday, a lot of short covering, losing 3,200 in open interest. Short covering meets new business. Some colder weather coming in. See what happens. We don't want to fight a directional market. I'm not interested in selling this market at all until I find some sort of structure to lean on in past and today and current structure. That's the word I'm looking for. We've got naked points control. We've got all kinds of things on both sides of this market. The most important is last night we broke out above our weekly kickoff high, and we are seeing continuation to the upside. The market opened, left the opening range to the low of the session, and is continuing to rise. Opening with a gap with no effort to close the gap. Don't try and sell this market without something to lean on. Some sort of structural piece, some sort of information from the past, and then let the market trade to it and see if the momentum slows. I'm not interested in selling this market today. Now, watch what happens. The market loves to make a liar out of me. Alrighty. You see, we do have some thoughts and questions here. Is there a video on using the TPOs? Fred, yes. Mind Over Markets is the classic market profile TPO source, authored by Dalton, Jones, and Dalton. Okay, Joe. So Joe is talking about something we've been talking about on Make Hogue Money. He's got this call wall, which is the largest concentration of calls on the book. And as price trades in that, there are dealers active in futures. So, a very important level for dealers that have to hedge options trading by buying or selling futures. So that base of the late spike is going to be somewhat important for us today in the S&Ps, huh? Bookmap will show a high level of liquidity when cash opens. Okay, excellent. Love the question, Besweed. They are very correlated. They're very related markets. However, sometimes very different. Vince, happy Thanksgiving to you. Special thanks to you as well. Alejandro. I've got a video here something I did a while back, and I'm going to give you the link to it. It's on YouTube, and it's the basics of market profile or TPO charts. Here it is. It's in the chat room there. Hopefully that's going to help you get you kind of sped up a little bit on the construction vocabulary and a way to start looking at the TPO charts. All right, Caesar, thank you very much. Nasdaq, everybody. I'm going to be doing Make Hogue Money today at 2 o'clock, and then there will be a recap at 3:15. Join me. Maybe we'll sit down, have a drink together, and think about all the things we are thankful for. And we all, whether we know it or not, have many things to be thankful for. I know I'm thankful for all of you and for the opportunities that we have in the markets and in the world, and thankful for my family, for my friends, for all of you, and for my God. All right, so take your deep breath. Say, I'm going to stay humble, grateful, and creative today in my trading. We'll see you in the proverbial trading pit here in just a few minutes. God bless you all. Happy Thanksgiving. If I don't see you later, hope you have a wonderful holiday. Get out there and profit today. Make sure you manage risk. Every day is Capital Preservation Day. We want to make sure we're going to be back here on Monday for the market forecast. Trade well, everyone.